Okay. Please, I hope you can see what I'm sharing.
Yes, sir.
Yes, please.
All right. Good morning once again. And my name is Maclean. Sorry, I have to delay you for about 30 minutes. I will be taking you for this course, and I hope you will participate fully and contribute. Now that you are in level 100, you've learned a lot, and I expect that you bring your knowledge into this course, because this course is more or less trying to be the watchman for what you have learned. So this unit will be looking at regulatory environment and ethical considerations of auditing, and is structured in to 6 sessions. So we're looking at international regulatory frameworks for audit and assurance, and then the laws that auditing is situated into. Then we'll look at the fraud and errors.
My doctor.
So fraud and errors. At what time can we say an error is fraud? Then we'll look at auditor civil and criminal liability. Can auditor make mistake? And if the mistake that the auditor has made, can you sue him for that or not? Or is the auditor liable to what he has done or not? Then we'll look at the fundamental ethical principles for accountants. So here we have 5 ethical principles: and integrity, objectivity, professional competence, due care, professional behavior, and confidentiality. And they also have 5 threats and safeguards. So 5 ethical principles and 5 threats. Then we'll look at money laundering and the role that auditors have to play when it comes
Sir,
to. Yes,
sir,
madam.
please, the PDF you are using is different from what we have. What we are holding is audit and internal review, but what you are projecting is audit and assurance practice.
Wow. So please, can you share yours with me? That's why the course rep did not try. That's why you should have called me or WhatsApp me to let us have consensus before the class, because I wasn't even aware that the class is 9. Who is the course rep, please?
So it depends upon the sentence you are handling. Every center has its own course rate.
Who WhatsApp me? So it's okay. That could be the reason, because if you have online, at least you should have course rep for that generally.
Sir, please, I just sent it to you.
You said
I said
okay.
I just sent it to you.
Yes. So please, what's your name?
My name is Elizabeth.
Hello, sir.
Yes, sir.
I've shared one with you. I just sent one. The our our model to you.
Okay.
But say the one you are using, who gave you that one? Because maybe your own might be a revised version or something like that. I don't. Can we know?
We have soft copies of the books, so that is where I pick it from. So let me check yours too. The one you sent me is the audit and internal review. Okay.
Yes, that is what we are supposed to be doing now.
Um, the one you sent me, when I open, I'm seeing audit and assurance practice. Oh, let me use my phone. Okay. Okay. So yours is the beginning of auditing. Okay, please, can you see what I'm projecting now?
Yes, please.
All right. So apparently we are supposed to start then auditing from scratch. What I was projecting was the I'm sure it's the second semester. Yeah. Okay, so of course here we are now coming to start auditing afresh. So we're looking at the nature and purpose of auditing. We have the development of auditing and what auditing means, then types of audit, then the stages of audit process, and of course, audit committee. We'll look at agency theory, then that will be for today. Please, I see the time is 2 hours. Is that the case?
Yes, sir.
And are we supposed to use the 2 hours for the whole unit, or there is another 1 hour somewhere?
It's 2 hours for the whole unit.
Okay. And it looks like we have already spent 1 hour. So
42 minutes.
you said?
I said we've spent 42 minutes, sir.
42 minutes. Yes. Is there a way we can find a different time somewhere and cover it up? Of course, even if it is during the week. This is now our own schedules, not the university schedules.
Yes.
Yes, surely.
So which time do you think we should meet?
So I suggest in the evening, but the day you should choose your day.
Okay, so in the evening, I will say Tuesday and Thursday is out because I have different classes at that time. So
Okay.
the rest of the days we can decide.
Friday. Suggestion.
Friday be convenient for some of us also.
You said?
Friday be convenient for some of us also.
Okay. So do we all agree to Friday? Please, let's hear from you. I want to fix Friday. Do you agree to Friday?
Yes, sir. Kindly give us the time.
Please choose the time for yourself. For Friday, I'll be available.
Either 7 or 8. Maybe by that time people will be back from work.
So how many hours, sir?
Oh, just 1 hour.
Okay.
We can do 2 hours if you have time, no problem.
Okay.
Mm.
Okay, the time, the 8 o'clock will be okay.
Why don't you make 7?
I think by 7, that's why I was saying that maybe people will not be back from work.
Or by
Because of
7, majority should be back from work.
Adam, let's look at it this way. The 7, this course has taken our Sunday's worship from us. So most of us who would have attended what do you call it, service on Friday, we may have to be we're going back home. So let's do the 8. I beg. Let's do the 8.
So, do you agree to the 8? Should we fix 8?
I'm
So
sure that's
if it's the
majority.
8 o'clock, then we can only do 1 hour because some of us, when we stay, the network is not good. So we have to always move out to a different place to have access to network. So if it's 8, then we'll have to stay wherever you are till 10 o'clock, which is late. I don't think it will be convenient for some of us.
Okay.
That's why I'm suggesting the 7, but you said it's also saying the 7. I don't know how
No
to worship.
problem. Adam, no problem. The 7, let's go with the 7. If majority will go with the 7, so that those of us who would like to go to church maybe can forfeit the lecture and go to the church and probably maybe do with the recorded version. I think that will be okay. Religion shouldn't come
Okay,
in
the
and stop
7 will
most
not
of
help.
us.
Okay, the 7 will not help because some of us too, we don't close early from work. And besides, 5 days that we are to come to our various centers for Saturday lectures. So if you are in a car, that's 7 lectures. You can't.
Then let's move it back to Wednesday because he said it's only Tuesday and Thursday that he won't be there. But we have Wednesday, Monday, and Friday. So if
You see,
Friday is not workable, let's make it Wednesday or Monday. Because
Um,
8
yes.
to 10
Yes,
o'clock, where I
I think
stay, I
I think
can't go
the
out then come
I
back
think the
home.
Monday should work.
Remember the first lecture. He was also suggesting Monday and Tuesday, but we didn't fix anything yet.
Which one?
the account
This thing. Yeah,
financial reporting.
yeah.
Oh, okay,
That was why I was suggesting Friday so that we wouldn't even temper with this one here.
then
But if
let's
we
Friday
do
will
can
be
go for
Monday
the
so that I'll do
inconvenient.
financial
Wednesday.
reporting Tuesday.
Friday will be inconvenient, sir.
Tuesday.
Oh, okay.
I
Let's
think
make it
Monday should work out.
Okay. Okay.
Monday is a busy day.
There, I don't have problem with the Monday
For
though, but I
Monday,
know many people Monday they'll be very busy.
Monday is a busy day.
Yeah, so we can do the Wednesday if that one has little issues.
So he said
For Monday, Monday
The
out.
Wednesday, our face because one of our lecturers here is also organizing one for us on Wednesday. That is Mr. Kosipa for Sokode Center. I don't know whether it will be a regular Wednesday.
Okay.
So that's what I'm saying. Kofi, I'm sure that's what Kosipa said yesterday when you met him.
That's fine. So in a way, then let's see what we can do today. We all know that auditing did not start today. If anything that involves money will have to be looked at with double eyes. You don't trust or you don't entrust things concerning money into only one hand. Why don't we give things that concerns money to only one person to handle? Yeah. Or you trust one person to handle monetary things. Do you have that trust for the person, for one person? Yes, Joseph.
The question again.
No, sir, we don't give all money to one person to keep because we have trust issues with human beings in general. So if we give all money to one person to keep, it will sound like my friend who told me that he keeps his financial figures in his head. And another staff in that same company said, look at this. Why would you keep your financial figures in your head? What if you die tomorrow? Where will you get the figures? So I think trusting human beings is the issue here. That is why we can't entrust all money to one person. Thank you, sir.
Good. Now, it becomes more difficult or complex when the one that is managing the resources is not the owner of those resources. If you are the owner, that one, you may try to manage it in a way that you will benefit. But if you are not the owner, it becomes difficult for you to manage it because at every point in time, you feel like you want to take decisions that will benefit yourself. Now, because of that, there will be less accountability, right? There will be less accountability. So whenever people are managing resources on behalf of others, then the problem of accountability arises. So if that is the case, we will definitely need someone to check, okay, another person to check what the other person is doing. So that is why auditing is developed. However, auditing did not start today. It can be traced back to medieval period. So at that time, that was the ancient times. So here societies were recognized that there is the need to check what people do, the people that you have entrusted the resources, what they do, and then also whether they are honest or not. So you could see that, and for instance, ancient Egypt or Rome, people were appointed to review the tax collectors' work or estate managers. Especially, we all know in the Bible about the tax collectors. So it got to a point people did not trust them, and different people were appointed to what, to review their works. Now, also in Britain, we have those we call feudal laws. The feudal laws were also employed as independent persons, and their work were to confirm whether the tenant farmers record the revenues that they are supposed to record accurately or not. So they didn't trust them. They need to get independent persons to also check what they do. They are supposed to record revenue from farming, and they wanted to know whether they record the revenues correctly or not. The same way, estates, they were also interested to check whether those people who are supposed to record the revenue, okay, record those revenues well or not. Now, at this stage, the auditing that they were doing, it was purposely for them to detect fraud and irregularities. So the focus was not on giving assurance, but it was for them to discover whether they are honest or not. That is the historical background of auditing. Now, the development of auditing today. So as businesses grow larger, they become more complex, and therefore there is the need for you to get more independent, smart people to check what they are doing. Business become complex, they grow larger. The owners of the business cannot manage the business alone. So therefore, they need management to manage the business. So that is why if you need more people to manage the business, you also need more people to watch over those who manage the business. So we realize that whenever there is that fiduciary relationship, especially when money involved, okay, then there became the need for independent and knowledgeable persons to what? To audit or to check the accounts of people who are entrusted with the resources. So here, when we talk about the company aspects, at the company level, you would realize that we have directors that are in charge of the companies, or the directors for the companies. They only act as stewards. So when we say somebody is a steward, what does it mean? Or what is stewardship?
So please, I'm trying. It's just like they manage the affairs of the business or the company.
Okay, they manage the affairs of the company. Any other one? Stewards. Who are the stewards? Or what is stewardship? So just like she said, they are supposed to manage the affairs of the company. So they are supposed to manage the resources on behalf of the shareholders. And also to report, okay, to the shareholders how those resources are managed. Reporting, as we know, as the businesses have evolved, the reporting come in the form of financial statements. So those financial statements, as all of you are accounting, you know, we have different kind of financial statements, but basically the standard give us 5 financial statements. What are the 5 financial statements that standard provide for us? What are the standard financial statements that you know? There are 5. If you know even one, mention.
Sir, statement of financial position.
Statement of financial position, otherwise known as what?
balance sheet.
Okay, that's one. Which other
Comprehensive
one?
comprehensive income statement.
What is the correct name? Adam.
This statement of comprehensive income.
Statement of comprehensive income. Okay, what's which one is not comprehensive? What is the right name? The standard provides the name for us. What is the right name? Statement of financial performance, right?
Yes, please.
Yes. So statement of financial performance. That's two. What are the other three?
You have cash flow statement.
Cash flow statement or statement of cash flow. Then
Statement of changes in equity.
statement of changes in equity. And the last one? The last one is what?
Notes to the account.
Notes to the account or disclosures. So they are the statements that whenever you hear statements, financial statements, these five should come to mind. However, there are other statements that in auditing we can talk about. So we can talk about reports from directors. So of course, these are financial statements. We also have non-financial statements. Non-financial statements. So annual reports contain both financial statements and non-financial statements. Can anyone mention any of the non-financial statements?
Sir, we have management reports.
Management reports. Any
Yes,
other one?
We also have directors reports, sir.
Directors reports. What about auditors reports?
I think that's the third one, sir.
All right. So those are the financial statements you need to know. So all these statements will be presented to the shareholders, and this fulfill the purpose of stewardship. Now, modern auditing is based on separation of ownership from management. The reason why we need someone to be or have a third eye is because we want to separate ownership of a business from the management. So we all know companies are separate, or they have what they call, they are artificial human beings. They can be sued, they can sue and be sued. They have a legal entity. So whatever is happening at the company level should not affect the owners. So when you are registering your company, you specify which aspect of company you want, whether you want it limited liability company, or you want it limited by guarantee and others. So therefore, whatever is happening at the business level is in the hands of management. So we want to check what management do. So shareholders own the company, but they do not manage it on the daily basis. So management manage those company on daily basis. And because of the separations, shareholders need assurance, because how can you give your resources to someone and you don't, because as soon as you give your resources to someone and you ask the same person to come and account to you, that person, because of conflict of interest, will not be in a better position to account to you. So auditors, management, shareholders will need assurance from a third party who's supposed to be honest and competent. So audit shareholders will trust auditors more than management. So that if that is the case, auditors are therefore engaged to independently examine financial records and express an opinion. So that is the work of auditors. That's why audit has involved. So they don't trust management. They need a third party who can give them assurance. The assurance upon which they will fully believe. So therefore, if you are an auditor, you have to be trustworthy, you have to be honest, you have to be competent. And what you are supposed to report, it should be true and fair view of your opinion. It should true and fair view. Audit statement or auditor's opinion should come as whether it is true and it is fair in the auditor's view. So that is why we say it is true and fair view. So whatever you state, is it true? Is it fair in your opinion? We want to trust you. So what you are saying, is it true? Is it fair? If it is true and it is fair in your opinion, we too will trust that. Otherwise, we don't have that eye to check or to determine whether what management is doing is true and fair. So audit opinions, okay, always end with the word true and fair view. However, we have different types of opinions, so we would look at them. And sometimes that's your true and fair view. Is it qualified or is not qualified? So when your true and fair view is qualified, then it means you do not agree with something there. But if it is unqualified, it means in your best opinion, it is okay. You can also decide to give an opinion that you decide not to express any opinion because you believe you are not in a better position. You have no relevant information to express an opinion, so you can leave it. We'll look at audit report and different types of audit opinion. Please, any question? So the case of Ghana. So in Ghana, which law is governing auditing? So there are so many laws that govern auditing. The company's code, is where auditing rests. That is where auditing emerging from. What is the current code? This is the old Companies Act. What is the current act? Yeah.
So is it is it Article 286 that talks about asset declaration?
No, this is Companies Code 1963 Act 179. This code has been revised in 2019. So what is the current code?
Yeah, Act 992, 2019.
Yes. Act 2019-992. So please take notes of that. We don't more use this code. So even though it's in the book, it has not been revised. We don't use this code. Right? So this code is revised. So we can say that the current code, okay, requires companies to appoint qualified auditors. You must appoint qualified, so far as you've registered as a company, it's requiring you to appoint qualified auditors. And the qualified auditor is supposed to examine your financial statement annually. So every year you must appoint qualified auditors to examine your financial audit. Okay, so you routine because of familiarity threats. Otherwise, you become familiar with the company and you can't express an opinion that we think is independent. And also, only members who are chartered account, who are part of IC, Institute of Chartered Accountant, are supposed to be auditors. Only members who are CA are supposed to be auditors. Yes. So it means before you become an auditor, you should be chartered accountant. Otherwise, you are not an auditor. You are not qualified to be an auditor. So auditor's duty is also, of course, we know, to provide reports that is true and fair on the financial statements. And then auditors, where do they present their audit report? Is it to management or at the AGM?
At the AGM.
At the AGM. Why do you think that auditors they are not allowed to give their financial reports to management?
The management will correct the error committed by them.
So yes, so the management, they will say, what have you done, cry? So they will not want you to present what you have found to management. So therefore, they want to correct the errors. That is the reason one. And also this is to ensure that there is more accountability, right? There is more transparency, and of course, there is confidence among investors. How can you tell me that I've asked to go and do investigations, I've finished the investigations, and I'm giving the investigations to the one I've investigated to be given to the other person? Yes. All right. So now let's look at some of the definition of terms. If there is no question, let's look at definition of terms. Auditing. What is auditing? What is auditing in your own view? Okay, so anyway, so we can't go ahead if you have. So we can simply say that auditing is a process. So it's a process. It's not really an event. So it's a process that, of course, should be carried out by independent and qualified persons. These are the words we always use everywhere we go in auditing. So it should be carried out by persons, but these persons should be what? Independent and qualified. We said that for you to be qualified as an auditor, you must be what? You must be what?
You must be
Chartered
a
accountant.
qualified accountant, chartered accountant.
Chartered
Chartered
accountant.
accountant.
Can I say all chartered accountants are qualified auditors?
No, sir.
Okay. Yes. So it's not all chartered accountants who are qualified auditors, but before you become an auditor, you must be a chartered accountant. Of course, in Ghana, they say that you must be a member of ICA. So if you go to America and go and charter as chartered accountant, you come to Ghana and you have not regularized it to be a member of ICA, you are not qualified to be an auditor. If you also become a chartered accountant through ACCA and you have not gone for membership of ICAG, though you are a chartered accountant through ACCA, you are not a qualified auditor. So every CCA qualified chartered accountant must apply to be a member of ACC. So if you are qualified through ACC, ICA. So if you are qualified through ACC, automatically you are also a qualified person, but you must apply to be a member before they will grant you. So this is a process, of course, that should be carried out by a qualified person or an independent person. And the role of that independent person is to examine the records and financial statements. Now, you know financial statements, right? There are 5. And records. The records are all the facts recorded, all the facts recorded during accounting process, starting from journal proper or starting from prime entry, okay, the scratch of recording a transaction, all the way to the end of that transaction. All the records you have, the auditor is supposed to examine all of them. Auditor has access to all the records in the organization. The law mandates the auditor to have access to all of them. And after the auditor is able to examine those records and financial statements, he can now express an opinion. And the opinion of the auditor will state whether the records and financial statements that he has examined is true or fair, or is true and fair, or otherwise. Now, we have 3 key ideas here. We said that in defining auditing, you have to mention that there must be independence. So these are the key words I'm trying to give for you. So the auditor must be what? Independent. So the word is independence, right? What other word should come in your definition of auditing?
The person must be qualified as an auditor.
Qualified.
So he must be a neutral person too.
It must be a neutral person. So if you are qualified, you are a neutral person, because before you are qualified, okay, you should abide by all the 5 fundamental ethical principles of accountant, which are objectivity, confidentiality, professional competence and due care, and integrity. And of course, you must ensure that all the rules and regulations are, of course, you obey them. So therefore, you must obey professional behavior. So that makes you a qualified person. What other word or key term do you take from the definition of auditing? We said you have to examine, right? They are supposed to examine financial records and statements. Is that not the case? You're supposed to examine financial records and statements. So if you are defining auditing, don't forget of those 2 words or 3 words. And the final word is that you should be able to express an opinion, right? You should be able to express an opinion. An opinion will tell us what the financial statements you have examined represent a true and fair view in your own opinion. So this is the definition of auditing. Please, we don't expect you to verbatim reproduce that, but there are keywords that should arrive in your definition. If we don't see those keywords, then you see that you are losing some marks. What's the next term? We have what we call independent examination. Independent examination. What do we mean by independent examination? So we are trying to say that the auditor must not be influenced by management. No matter what, the auditor should not be influenced by management. The auditor must be independent, of course. So it means the auditor must be factual. The auditor must be factual. The auditor should have rare independence, not perceived independence. You say, oh, you are independent of your work, but when you go into details, you will see that you only have perceived independence, or the independence is on a paper, but in reality, you are not independent. Can you give us an example of a situation where you think when that happened, auditor is not more independent? Right? No example?
So please, when the auditors are influenced by the management, like maybe if they committed coming again.
So we just want specific example that may happen and you think auditor becomes no more independent. If the auditor has investment in that company, can that auditor be independent?
No, please.
If the auditor wife is part of management, can that auditor be independent?
No, please.
If the auditor's friend is Joseph, who is the CEO of the company, can that auditor be independent?
No, sir.
No, please.
If the auditor accepts gifts from management, of course, you have come. You say that they would want to take you out. You went out, they bought nice food for you, and they say, oh, just take this 10K for your rounds around. As soon as you take that 10K, can you more be independent?
No, sir.
No, sir.
Yes, I saw a hand. Who was that? Okay, so since it's down. So these are okay. Nashiru.
Sir, if
Yes, sir.
the person can take that money and then yet be independent if they want to.
How will you be independent?
Why wouldn't you? It's just a matter of your own self. Because if you should give me that money, does not mean that I must I should compromise with my work. So if
Why did you take the money? They are supposed to pay you for that. Why did you take the money?
they are giving you just for you to maybe go and if you are to go and chop some chinchanga.
Why? Are they those to feed you? That work, if assume you are from KPMG, are you telling me that KPMG cannot give you money, pay you that you get enough money to do your rounds? Or to chop that chichinga you are saying? Is that what you are saying?
You see, I say this because if
Okay.
you see most of the even the auditors sometimes they come to us and then they tell us that they are even giving their per diem from the office, like from their office, right? So
Okay.
it's not our money that they would come for or that would influence their judgment, right? I am saying this because if you are giving them, yeah, you feel that you have the money and you are giving me, bring the money, I'll pick it, and yet I'll do my work as it is.
Are you even sure you do your work as it is? That is where the
Oh.
problem is. Because you take the money. Okay, assuming you have gone to, let's say, Abedipele Stadium to go and audit, and they gave you um, uh, 20,000 as your rounds, and you are going back to which other company is in Tamale? Can you give me any other company in
Okay,
Tamale?
let's say another stadium or something because it's only
Or maybe
one that is in
Melcom,
Tamale.
You said?
Melcom Ghana in Tamale. Melcom
Yeah,
in Tamale.
Melcom Tamale. You are going to Melcom Tamale.
Yeah.
You are going. You say, hey, these people they gave me 20,000. The Melcom is bigger than this company. Melcom they will give me 50,000. You are going, you get them. They didn't give you anything. How will you feel, Nashiru?
Well, anyway, I get
So
I
you see
get
that
the point. I get your point because once they have given you, you will now feel that anywhere you go,
they should give
you
you.
will
It's not
get
like an
something.
entitlement. Yes, it
Yeah.
becomes an entitlement for you. And whenever that thing is in your mind, you can never be independent.
Yeah.
And you feel like, oh, maybe you have raised so many. When you go to Melcom, I say like you went to Melcom and you see that, oh, me, I want to always be independent. I want to do my work the way I see it. You raised so many issues at Melcom and the issues became so topical and those things. Melcom people said, okay, fine, we'll not give you anything. They didn't give you anything. You say, hey, because I've gone to raise so many issues at Melcom, that's why I didn't get the 50K. I think I should change. I have to change. And then whenever if you go then follow year to Melcom, you are going to audit them. You say this thing is an issue, but we can do it this way. So you always try to hide issues from public or from shareholders because of your own selfish interest. That is the threat we call self-interest threat. As soon as you feel you are going to get some benefit from that company, from that auditing you are doing, and it is at the back of your mind, then the threat for you not to be independent is self-interest threat.
Yeah.
Yes.
Yeah. No, it's yeah. I get you. You
That's
have a
it.
point. It makes
So
sense.
without independence, the auditor's opinion has no value. Yes.
That's true.
Without independence, the auditor's opinion has no value. So let's say you will see National Cathedral when the KPMG came to audit. So pressure was there on them. Pressure was there on them. If they don't take care, they will succumb to the pressure because it was divided. The previous government wants an opinion that should favor them. Then the current governments, they have used that as their campaign message. They also want an opinion that show what, of course,
That
support
should
their
favor them.
argument. So if you are in that situation, if you don't take care, you can never be independent. That is a threat.
Yes, sir.
Suitable person or suitable qualified person. Suitable qualified. We always say the person should be a qualified person. Who is a qualified person? Who is a qualified person here? So we said that the person that is a qualified person, the basis is that the person should be part of ICA in Ghana, and that person must possess professional qualification. That is ICA, first of all. The second one is that you must have skill and experience. Skill and experience. You cannot just complete ICA and you say you are an auditor. What skills, what experience do you have? So you go and work as a trainee before they would show you what you are supposed to do, before you gain that experience and then skill. Though you are qualified member, you do not have experience, you do not have skill, you cannot be a suitable qualified person. And that person too must have ethical tone and must be honest. You must be ethically sound and be honest. Yes, in all your dealings. Sometimes people begin to hate you because you are honest. Is that not the case? Is that not your case? So the ingredients of suitable qualified person is that the person should have that professional recognition, professionally qualified, and the person should have the relevant knowledge and skill. Okay. So if I ask you to state the ingredients of a suitable qualified person, will you be able to do that?
Yes, sir.
So the next one is record and financial statements. As for this one, I've been singing about it. Record and financial statements. So we know records, we know financial statements. We know that financial statements are already three. Is that not the case? So for this one, we are saying that the records should include source of documents, all the source of documents you can think about, like the invoices and receipts, and of course, any other document that you think is the originator of the figure, it becomes source of document. Then books of prime entry, ledgers, trial balance, or balance sheets, and then income statements, statement of financial performance, and then also statement of financial position, cash flow statements, notes to the accounts, all are financial statements. Then the director's reports. So all this can be grouped into financial statements and records. Please, as an auditor, don't go and trust the figure the person has put together for you. You go and see revenue figure in the where can we find revenue figure? Which statement can we find the revenue figure?
The income statement.
Income statement, the first figure is revenue figure. You see 560,000 as the revenue figure. And you, as an auditor, you just begin with that. You less cost of sales, opening stock, purchases, less closing stock. Oh, it's correct. Oh, the gross profit is correct. What are you doing? That is not what you are supposed to do as an auditor. You have to trace. You have to do tracing figures. Let me put it that way. Trace where did you taxes, where did you get that revenue of 560,000 from? That is what we call professional skepticism. You must be asking questions. The person provides the figure for you, see the invoices or you see the receipt that constitutes that 560,000. You say, no, I don't trust this receipt. This receipt, who is it from? Can you give me the debtors the debtors contact? Okay, I want to call and collect the contact, call and find whether this amount is actually coming from, originating from the data. Yes, you don't trust their figures. Don't trust their figures at all. You are not there when they prepare the figures. They can coin anything for you. Don't trust the figures. Only trust the original source. And also you trust yourself. Don't trust anyone. You trust only yourself. Opinion. What is an opinion? As I said, so the opinion of an auditor is, of course, professional judgment. It's a judgment. That is opinion. That is a judgment. Okay. It is not about 1 + 2. It is about, oh, I the auditor, this is what based on what I found, this is what I think it is. That is opinion. So every opinion must be based on evidence that you have gathered as an auditor. The opinion is not a guarantee. Opinion is not the final answer. You are only providing some reasonable conclusion. Reasonable conclusion. When we say something is reasonable, it means it may even be lesser than what you have said, or it can be more than what you have said. Of course. So opinion is not a final conclusion. It is only reasonable conclusion. And you can't guarantee. Nobody can send you to court because of your opinion. That is an opinion. If they accept, fine. If they don't, no problem. So auditors are only giving opinion to the shareholders. Will they accept? They will not accept. That is not the work of an auditor. It's not a responsibility. So opinion, of course, we know is professional judgment, and it's based on evidence that you have gathered, and it is not a final conclusion. It's only a reasonable conclusion, and it does not guarantee that there are no errors or no fraud. That is not the meaning. So your opinion is not telling them that everything that they have done, no error, no fraud, or no fabrications, but you have not seen those things. That's why you are saying it's an opinion. True and fair. True and fair. What does it mean? If you say something is true and fair, or auditor's opinion is true and fair, or auditors have true and fair view. So what we are just basically trying to say is that the financial statements, according to the auditor's opinion, they are free from material misstatements. We are not saying that they are free from misstatement too. We are saying they are free from material misstatements. So the material misstatements, that's what you are saying. Nobody should go and quote the auditor that the auditor said they are free from errors or free from mistakes. No, we are saying they are free from material misstatements. Something is said to be material if the absence or presence of it is going to likely change the decision that you would have taken. Okay. So if an accountant commit an error and that error will not have significant effects, then the auditor can say the error can be corrected and it will be overlooked. He will still come and give his true and fair view. If there is a decision taken, the auditor thinks the decision the board has taken is not in line with the laws, auditor can write to the board. Auditor must not surprise the board. Go and put something that you've never communicated to the board. No, write to the board and then, or management, of course, write to the management tell them that this is what you think it should not be done. They should reverse it. Management can decide and agree that they will reverse it. So therefore, the auditor will add it to the recommendations. And the auditor will still go ahead and give a true and fair view because management has agreed to the mistake, the error they have committed and said they were going to correct it. So the auditor will still go ahead and say the audit is, in his opinion, is true and fair, subject to the recommendations the auditor has said they should do. Then the next one is proper books of are kept. So the auditor is saying that in his own opinion, he thinks that the books that they have kept are in line with the laws in accounting. So there are proper books. Proper books are what kept. The next one is that, of course, figures agree with underlying records. So they have cross-checked the figures. They have done their recalculations and they believe that what was in the invoice or what was in the receipt or total to the revenue that they are seeing. That is their view. Then also that the account financial statements follow accounting standards. Of course, it's not every company that is required to follow accounting standards, but all listed companies are required to use accounting standards, IFRS. But other companies are encouraged. Of course, if you are registered under the registrar company of Ghana or something, you are required to prepare your financial statements and auditors are required to audit it. So therefore, you are supposed to use the best practices to prepare your financial statements. But you are not fully obliged to use IFRS. You can use the best practices to prepare. However, if you choose to do IFRS, you must continue with the IFRS until you decide formally not to use that. If you cannot be an accountant, you say this year I want to use IFRS, next year I will not use IFRS. No, it's not, it doesn't lie on you to decide to say so. Then the next one is, of course, the financial statements that you see, which include assets and liabilities. You believe that the assets and liabilities are properly valued. Meaning that what is stated in the PPE is the correct figure in your opinion. What is stated as the debt is the correct figure in your opinion. That is simply what the true and fair view means. And also the same way revenue expenses, you know that financial statement, balance sheets and profit and loss account. What is in the profit and loss account is revenue expenses. What is in the balance sheet is assets and liabilities. So anything you find in the balance sheet is either asset or liability. And capital, equity. So three things. That's why we have accounting equation. So the auditor is saying that what is in the balance sheet is correct. What is in the profit and loss account or statement of financial performance is also correct. Please, are we safe?
Yes, sir.
Okay. The next is truth. What is truth? As for truth, you people should explain. What is truth? What is truth?
So, truth in the layman sense is that a statement or an object is not false. That is the direct opposite.
Thomas, right? Joseph.
Yes, sir.
So the statement is not false. You want to send us to law. So the statement is not false. Okay, that's your opinion. Truth. What is truth?
So, sir, as I've explained, it means that if the auditor takes the information, the data from the management staff of the company or the firm, all the financial statements and everything, if he's able to establish at the end of his audit that all that has been done is the truth, it means that the processes from where he started to the end of the audit is not falsified. The information is not falsified. That is what I think it can be explained as truth.
That is great. Yes. Any other opinion? Raymond.
Sir, saying it the way it is.
You said?
Sir, saying it the way it is.
Okay, saying it the
Saying
way
it the way it is. The fact.
Saying it the way it is, yes.
Yes, that's the fact of the reality.
You have no business modifying what you have seen. That is not your business. Don't modify what you are seeing. So we are trying to say that truth in auditing simply means that the statement says true and fair. So the truth that you are seeing, or the true that you are seeing there, we are saying that the information is factual. Information is factual. And also, we are also saying that it conforms to reality. The information conforms to reality. We are also trying to say that you have, of course, extracted correct records. So the person comes to buy, someone comes to buy, what do you buy? What do you want to buy? What do you sell? And who comes to buy what?
Okay, so let's assume I supply soybean.
Soybeans. The person comes to buy 10 sacks of soybeans, and you give the person the receipt of the 10 sacks. The person will never accept a receipt that maybe one bag is 500 cedis, 10 bags is 50, how much? 5,000. You are giving the person a receipt of 5,000 cedis. Would the person accept a receipt of 6,000 when he's paying for 5,000?
No, sir.
Yes. The person will not, unless the person too is corrupt. So the person accept the receipt of 5,000. That receipt, copy of that receipt must be there. The auditor goes and sees the receipt of 5,000. That is a fact. That is correct. And then the auditor traced that receipt of 5,000 into the original books of accounts. It's stated the original books of accounts, they wrote that this person, this person paid 5,000. That 5,000 is posted to the individual ledgers accounts. Maybe the person hasn't paid completely, it's a debtor. Then the debtor account is posted to the trial balance. In the trial balance, the same 5,000 is seen in the trial balance, and the same amount is posted to, of course, balance sheets, and that is the final account. So in the balance sheet, you see the 5,000 there. Also, as an auditor, when you go, you trace the records, you see that 5,000 is appearing everywhere. That information that they have extracted from the receipt that they give to that soya beans buyer is said to be correct record. And the treatment of the 5,000 debtor, of course, the person is a debtor. What is the standard saying you should treat those the debtor? And of course, at what point do you even recognize that 5,000 as revenue according to IFRS 15? So the IFRS 15 will tell you on the condition that you should treat that 5,000 as revenue. So if it meets the conditions is specified in IFRS 15, then it means that there is truth in what you are saying because it's comply with the standards. So that is basically about the truth. Truths, the information should be factual, and should conform with reality. The records that you have extracted is correct, and the treatment is in line with the accounting standards and laws. Fair value or fair. The next one is fair. Fair. At what point the information is fair? Sometimes some of the information you have may not be fully true, but you can say that it is fair. It's not fully true, but you can say it is what? Fair. Right? You can say it is fair. Under what circumstance will you say information is fair? or the report is fair, the opinion is fair. We can say the opinion is fair when the information that is provided is not biased. So if it is not biased, but we can't categorically state that it is true, then we say the information is fair. It's like Joseph coined a truth to be not false. So if it is not biased, then we say it is fair. If the information is not manipulated, then we say it is fair. Okay? You do not manipulate that information, then we say it's fair. Then the last one is, we say that we talk about economic substance and legal form. Economic substance and legal form. So if the information reflects economic substance and not legal form, then we say the information is fair. Have you heard of those words before? Economic substance and legal fair. Have you heard of it before?
No, sir.
So assignments. Everybody should write assignments. When you go do it for yourself, don't bring it for me to mark. What's the difference between economic substance and legal form? Or when we say economic substance and legal form in account, what do we mean? You will learn more from that. I hope we are safe up to this point. Is there a need?
Yes, sir, we are safe.
Is there a need for us to have auditing? Why is auditing necessary? Why is auditing necessary? Why is auditing necessary? Yes, sir.
Sir, auditing is necessary. Yes, auditing is necessary to the shareholders of the company because it will reveal the true financial status or financial performance of the firm or the company within a particular period of time, maybe FY26.
Good. Good. That is great reason. Any other reason why auditing is necessary? So I just say what is the importance of auditing? So if you go and change words to anyhow, you should be able to identify what you want.
One importance of sir. One importance of auditing is to ensure that financial information is represented fairly and accurately.
Okay, good. Information is represented fairly and what accurately?
Yes.
Okay. Sir. What again? Thank you.
You are welcome, sir.
Yes. So any other reason? Let me point. Doris. Akula.
Sir.
Yes.
Hello.
Yes, we can hear you, madam.
Sir, you mentioned my name.
Yes, answer the question.
Sir, the question again.
You are not here. Why is auditing necessary? What is the importance of auditing?
Oh, okay, sir. To reveal true and fair of the financial statement of a company.
Okay. Frederick. Suku.
Yes, sir.
Give us one reason.
Auditing is necessary to give external or like potential investors confidence. To invest.
That's okay.
Yes.
That's okay.
Mm.
To the investors. That's great. Kobnachia.
Yes,
Kobnachia.
sir. Yes, sir.
Importance of auditing. Then better follow.
The
Yes,
auditing
Achilles, yeah.
auditing is important to ensure that the financial statements or records are accurate and then they comply to the standards that's expected.
All right. That is good. Compliance with laws and regulations, simple and short. Please, this one, think. Sometimes points are there. Don't say because you have not seen it in the work in the book. You are all matured, so I know you. So think, you'll get it. Yes, better.
So, to identify errors and prevent fraud.
Good. So to identify errors and prevent fraud. That's okay. So you all know the relevance of auditing. Now, modern companies, of course. So auditing in modern companies, okay, you know that modern companies have become more large, as I indicated, and complex. Some even operate across the countries, multinational companies. So if you hear multinational companies, it means that the same company operate more than one country. So multiple countries. So KFC is found in multiple countries. True or false?
True.
What other company is multinational company is in Ghana?
Unilever. Unilever.
Unilever. What again?
Malcolm.
Welcome. So these are multinational companies. They become complex because every company and uh, every country and their rules that are governing companies. And these guys, they bring smart guys across countries to come and manage them. So they would always engage in issues that are more complex for even the ordinary accountants to understand or ordinary auditors to understand. Especially in transfer pricing, of course, they can decide because let's say KFC, or for instance, they are having the same company or subsidiaries, okay? They can decide to do things that will benefit them in total, but it will not benefit one particular aspect of their subsidiary. So they can, of course, shift profits to what we call tax holiday countries. Tax holiday countries. So if they see Ghana is making so much, they're charging so much taxes, they can look at where they will push more cost to Ghana. You see the logic, and push more revenue to where there is less tax. More cost to Ghana, more revenue to where there is less tax. What does it mean? What I just said, what will be the results for that?
The result for that will mean that particular company will pay less tax because costs has been pushed to Ghana, and
Okay,
it will increase their expenses and it will reduce the amount of tax they should pay.
that's it. So in Ghana government will, though KFC is in Ghana doing a lot of things, but at the end of the day, the revenue that the taxes that government of Ghana gets from KFC is small. They don't understand what is happening. Yes, so auditors, of course, will have to be sure to check and be sure that they don't do that. As an auditor, you are also representing the government of Ghana. If you go and they are doing things that are not allowing them to pay more taxes, and you think it's not the right thing, you must raise the red flags. Of course, that is it. So that's in modern world. Auditing has become more complex as large companies have also become more complex. So ensure that the accounts are in line with the laws, they are in line with the standards, policies, and controls. Make sure that the accounts are. That's why you are supposed to be more independent. If you are an auditor, you go to these complex companies and you don't understand something, you must seek for independent experts' opinion or independent experts. If you don't know how they have done the calculations, and maybe the calculations require someone from actuarial sciences who is going to use complex tools to do those, and you don't really get it. In fact, you must seek for independent expert to come to board and go and do it and give you their reports. That is it. So the auditor alone is not actually, of course, supposed to do everything. If you don't understand, please don't say you don't understand. Don't worry yourself. If you don't understand, you don't understand. Right? Okay. So we all know the people who are interested in the financial statements and audit reports. Who are the users of audit reports? I want to frame it that way. Who are the users of audit reports?
The shareholders.
Shareholders. Okay. Apart from shareholders, who else are the users of audit reports?
So
The
investors.
government.
The government, the investors. Who else are
Yes.
the users of audit reports?
Even the employees of the company.
The employees of the company. So let me put it this way. KPMG report on National Cathedral. Who were the users? Or who are the users of the report?
The donors. The donors,
Okay.
the people who contribute to like make sure the cathedral is being built.
Apart from that,
the churches.
yes, the churches. Who else? There are some people I want you to mention.
The citizens of Ghana.
The citizens of Ghana. Citizens are also users of audit reports. You understand? And if you say citizens, all of us, including the auditors, is that not the case?
Sure.
So have you seen the reason why you need to be independent? Because your reports is going to be used by a large number of people. People are going to make arguments. People will kill each other because of your report. And because, like, is it Nashiru or Joseph? One of you say you take 10,000. You take 10 because of your 10,000. People are going to kill themselves because of the. You are in your room. You are watching Joy News or TV3. You know that this report that you have churned out is not true. How will you feel? How will you feel? You feel bad, right?
Yes, sir. You feel bad.
So please don't skew your reports just to favor some people. Say the truth. Let them argue about the truth.
Sir,
You
so
have no
this brings
business
me
there.
to, sir.
Yes, sir.
Hello, sir. Yeah, this brings me to a question I've
Yes,
been
sir.
having in my mind since we started this topic. I mean, I've been trying to find out. So all that we're saying here is telling us don't do this, don't do this. But in the real world, we haven't seen these things also. For instance, political influence comes in, and then a regime, a particular post regime will now ask the auditors to audit the past regime. And then the past regime can also influence the auditors. And why is it so? Why is it that some auditors are not independent? Like they introduce bias into the thing. Like they will audit and nothing will come out of it. At the end of the day, the culprits will go free, scot free.
That is a problem. You see, that is a problem. Auditors, of course, they are not doing forensic auditing. They are not supposed, what they are doing is just to match what you are supposed to do against the laws. That's all. They are not those to judge whether what you have done is criminal or is not criminal. It's the work of the law to judge. So auditors will just match what you have done against the law. So sometimes they give their opinion about something, and their opinion is an opinion. And you know that they do sampling. They have not done everything. They have not picked all the information. So it's possible that the rest of the information they did not touch could just take the person out of problem in the court. So the auditor will give you the report, you go to court, the court will say a different thing. And not because the auditor report is not right, but it's right. But auditors do sampling, and the auditors are not those to judge. They are not the final judge. So therefore, you cannot fault them. It's only a problem when let's say politicians try to influence them to make it the way they want. That's why you must stand on your ground. Stand on your ground. Don't, though every auditor, every person is political human being. As an auditor, you may have the inside you may have the party that you have. All of you have parties in your blood that you support. But if you are in the position as a professional, you must put all those aside. Otherwise, it would jeopardize what you are giving out. You must put those aside and then present exactly what you are seeing, and that is war. Nothing more, nothing less. They will put pressure on you, but of course, stand on your grounds and make sure that you give the right. I think you have the next class at 11:30. So, right? Am I right?
Yes, you're right.
Yes. Rosemary.
Yes, sir.
Yes, madam.
Please, I want to be clear of something. When you are talking about the independent, you being an auditor.
Okay.
So I want to ask that, assuming I'm an auditor and I'm going to audit a particular organization, and I got to know that maybe my husband has an interest or is either the accountant there or something like that. What is the right thing for me to do? Is it that, like, I want to know what is the right thing for me to do?
Of course. So safeguards. So we are going to talk about safeguards later. Okay, it's not this one, the next one. So let me just take this and explain. Safeguards. So you must find ways to protect yourself from being influenced. You said you are going to audit and your husband is the accountant. First of all, this one I'll tell you, don't go. Decline. That is not the only thing that will make you rich. Decline, don't go. Okay, that is it.
Okay.
Even yes, because as soon as people get to know your husband is the accountant, you are the auditor. What is that? What are you saying? Will you go and put pressure on your husband at the board meeting or the auditors committee meeting and go home and still be in the same house? No, you will not do that. You go home, your husband is telling you, before you even come, your husband is telling you the criminal things they have done. And so therefore, when you go, don't make sure you don't go there. You are the one going to decide the sampling, right? Sampling should be probability. So your husband tell you that, hey, this time, this thing, we did this. So if you are going to sample, don't go that side. In your mind, you said, okay, sampling, let's use this, and you would dodge that particular transaction your husband told you. You go and do the things based on the transaction you have gathered, everything is fine. But you know at the back of your mind that you dodge something. There are a lot of things that will happen if your husband is an accountant and you are the auditor. So the best thing is to resign from that audit team. Assuming you are working at KPMG is putting a team to go to your husband company to go and audit. Of course, KPMG should know that that's your husband who is the CEO or whatever. Then KPMG will not include you. They will also ensure they provide Chinese wall where you will not get access to your husband, or you not get access to the team that is going there, or something like that. Other than that, there is serious conflict of interest there, and you should not go. Yeah. If you don't know that your husband is an accountant there, and when you get there, you get to realize your husband is an accountant, you must come back to the audit firm and report that no, you cannot audit this because this is what you have. According to IAS 24, this disclosure of related parties. Anytime there is a related party, or anytime you think that something is going to create conflict of interest, you must disclose it to the audit firm as well as the auditing firm you are going to audit, or the company that you are going to audit. You disclose it. If you disclose it, of course, let's take the husband and wife away. If it's something that you think it creates conflict of interest and you disclose it, but the auditing firm thinks that that will not be a bigger problem, you go ahead and do it. Then you go ahead and do it. But at that time, the auditing firm will also have another something that will say that whatever you have done, there should be a third party to review whatever you have done. Whatever you have done, they will review it. Someone will review it and agree and decide or disagree with what you have done, because you have disclosed conflict of interest related issues, according to IAS 24. Yeah. Please, we didn't start early, so let's not chop into someone's time. So we continue when? When should we continue? Please, you
We
can.
said Wednesday, right?
Yeah, so the one
Friday.
Oh no, they suggested Wednesday, Adam. They shifted it from Friday to Wednesday.
So called this thing, whole campus, you have in class on Wednesday.
Oh,
so
but when the majority suggested, you didn't bring this.
No,
okay, no problem.
What I will suggest, who was the first person that contacted me?
I did.
You say your name is what?
Elizabeth.
So Elizabeth becomes the cost rep here. Okay. So please, you can pull yourself together and create a WhatsApp page for the online auditing. Then when you do that, you add me to that, and then give me the day, the time and the day, so that we'll meet.
Okay, sir.
Unfortunately, do not have all of us our contacts. Elida, do you have other cost reps contact?
No, the only thing is that just stay behind. I'll create it right now. Share the link on the page here. Then you join. Then the rest can share from their end.
How will you share a link?
Once you join, you can now share it. It will be in the WhatsApp page for you to share it to your class.
No, then you just put your number here so that maybe it's. I would suggest you maybe put your number here.
Put your number there, you chat one of the class reps. When you send it, then it can be shared.
No, she will just create the group, and then you everybody will join, just as she suggested.
No, but how did you create a WhatsApp group on the distinct what's their name? On the
link will be in the messages here.
Adam, she will share the link at the chat box. So when you open the chat box where we can all chat here once the lecturer is taking the lecture, when you open there, you see the link. And then when you just click the link, it will send it to the WhatsApp, then you join. That's how it's supposed to be. It's in fact, it's effortless.
Yeah.
I think, sir, it's another. We will do that, and then maybe once we come together in one this group, maybe we can set the dates weekly, and then probably we can be doing the 1 hour addition or 2 hour addition for the lecture. Thank you. So Elizabeth, kindly hurry up and then share it so that we can begin joining.
It is done. So once you join, you can now exit.
So I can leave you now. Have a good day.
Thank you, sir.
You can see anything in our message. Oh, okay.
It's in the chat box. So click on the link and join. That's all.
Okay.
No, mention to Mama. I don't want. Okay, let me drink. Mama. Go. But you say I shouldn't give to you. So, no cold water. And you collected it, you son. Yeah. Yeah. Go ahead, Mama, and put it down. Yo, Chama. Oh, yo. I said go.